Good morning. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Kevin McPartland. He's the head of Market Structure Technology Research over at Greenwich Associates. Thank you very much, as always, for joining us at MarketSite. And we're going to talk about the benefits and future of quant investing. So let's review your latest piece on the benefits and future of quant investing. What were some of the parameters that you took a look at? What was all the research that went into
that? So this will be out soon. So what we really wanted to do was dispel some of the myths around quantitative investing. So what we're talking about, fundamental investors, of course, right? They're concerned about product strategy, what the CEO is thinking about the earnings, growth expectations. Whereas quantitative investors are more concerned about the data, right? They're looking at trends in the data. They're trying to find anomalies between prices. Really, they're less concerned about what the actual underlying firm is doing, and more concerned about what how those products move.
And this is a big market. There's over $1 trillion invested in the quants.
Yeah, it's a huge market, and it's only gotten bigger, and that's important for a couple of reasons. One, of course, the amount of volume that they inject into the market, which in many cases can equate to liquidity, is huge and growing, and that's really a positive. And then for the large broker-dealers and the large banks, this is a large revenue pool for them as well, right? Even if their assets under management are smaller than some of the biggest money managers, the amount of trading that they do, which generates revenue for the large broker-dealers, is pretty big. So it's a sizable amount of the revenue for them.
So what defines a quant fund as a quant fund?
Yeah, no, it's a great question. So there's a couple of things. So one, generally speaking, their time horizon and their holding periods are a little bit shorter, right? So these aren't long-term investors. Long-term for a quant fund, we're not only talking a couple of seconds or minutes. It certainly can be a month or two, but it's generally not 6 months or more. Once you get into that time frame, more 6 months, then you're talking a little bit more fundamental. It's also, there's a lot of automation involved, right? So there's not a lot of pointing and clicking. Even the research, to some extent, a lot of that is automated, right? It's data science and algorithms and sort of digging through tremendous amounts of data to look for these anomalies. And then lastly, they're very, very focused on transaction costs, right? If you're trading so much, every extra basis point it costs you to do those trades can really have an impact on your ultimate returns.
So would you say the difference between fundamental investing and quantitative investing is a good thing?
Yeah, well, so especially over the last 10 years, where a lot of markets that in the past weren't very correlated have been very correlated, right? Everybody's going in the same direction and thinking the same ways. And that's where quantitative investors can come in. If there's a macro view about moves in interest rates or move in the stock market, quant investors might be looking at the other side. They're looking at different parameters. They're looking at different sets of data rather than the macro fundamentals, which could have them taking the other side. And the market, most certainly needs people to take the other side, especially as the big banks have deployed, less capital to these markets to make markets for their customers. Quant investors, their model obviously is different. They're not in the business of serving clients. However, their ability to take the other side of a trade and do that in what they hope is a profitable way, I think is ultimately very beneficial to the market.
All right. Well, thank you very much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.